So now we're switching over to the investment paradox. Are markets rewarding the wrong climate strategies? I'm with John Cook, the SVP of Portfolio Manager of Mackenzie Greenchip, to discuss this. John, let's start with the elephant in the room. And Julian mentioned Musk at the end of his statement. What's happening in the US? How is that going to affect investment in these markets more broadly? How are we going to fall behind? You're Canadian. I'm an American, but sitting in the camp of Canadians today. What's going to happen here? Give us your perspective.
Oh, my God. But you're married to a Canadian.
I'm married to a Canadian.
Okay.
So.
I'm on half safe ground. Okay, our world turned upside down a couple months ago. Some of this we could see coming, but and it is related. What's happening is related to the energy transition. But just let me start with how integrated the Canadian economy is with the U.S. economy. The U.S., in terms of energy, produced 13.5 million barrels of oil a day. For 25 years, they consume 20. They're not Saudi America, as they claim to be. We send 4.5 million barrels of oil, heavy oil, down to 25 refineries in the Midwest. And it's almost impossible for them to replace that. We send 27,000 gigawatt hours of electricity south each year, a lot of 80% of the potash that the US consumes, 25% of the uranium. Like, in terms of energy, we're really tied at the hip. But, you know, we can't consider this 51st state thing a joke. Like, Canada's never going to become the 51st state. It's actually worse. We may become some sort of, I don't know, subsidiary of the US, but without any voting power. But, you know, our response to what's going on right now would likely be to redirect more of our energy east-west rather than south. And that would be, to me, a national security issue for the US. So us working through this climate is extremely challenging. And I think what's happening is, you know, financial sustainability in Canada is running headlong into climate sustainability. You know, just one example of how this is changing things in terms of the environment. Canada's right now, our electricity grid is 82% green. We've got blessed with lots of hydro. We have a lot of nuclear in the province I'm in. When we ship electricity down to the States, it's almost entirely green electricity. If we stop doing that, it would be replaced with natural gas and coal. Coal would come back on stream because they would need to. So there's so many areas where the transition is going to be affected by this. And I think the biggest is likely, you know, just the cost of capital and how long-term capital is needed for this. So we'll see, but our world is turned upside down.
Let me ask then, you've already this, before we ever had Donald Trump in the White House, there was a general perception from you that we're investing in the wrong places.
Yeah.
How does this additional factor and complication further create necessity to rethink how we are investing if we actually want to drive the energy transition?
Yeah, I think, well, I think what you're getting at is a couple beliefs that we've had. We've been investing in the energy transition for the last 20 years. And it seemed to me we get really confused with the language we use. I'm just talking about investment right now. ESG, climate, sustainability. To me, for investors, it's quite confusing. And I think that intersects with a group of benchmarks, which really support, in my view, two ideas. One is low carbon investing, and the other is energy transition investing. And they couldn't be more different. And the final one, and it's sort of related to the first two, is our world is so obsessed with financialized schemes and short-term investing that we really aren't getting enough capital to energy transition. So as an energy transition investor, I believe we need better language, more clear language, a more specific group of benchmarks that transition can benchmark its performance against. And we've got to get investors starting to think more about and leaning into high CapEx investments. Otherwise, we're going to end up in a climate trap where we just don't get ourselves beyond that.
In the absence of those new benchmarks right now, what advice do you give people if they are really interested in coming on this journey and rethinking where they're investing?
Yeah, I mean, I think a couple things. The first thing is, as investors, it takes time to produce returns in investment, but we've got to lean more into value creation and get away from price momentum strategies, which are really dominating if you think the last 20 years. Secondly, I think we need to think about risks differently. Our industry, it's all backward-looking risks. I mean, this is an impact conference. Any impact concerned investor, they understand risks better than the financial markets do. We should be thinking about forward-looking risks, not backward-looking risks. And the final one is, as our new prime minister, as of hours ago, called it the tragedy of the horizon. We do have to extend our investment time horizons. And I'm absolutely convinced that the returns will be there for investors that do those three things.
I guess, is it solely the kind of temporal factor that is deterring investors from looking at these alternative options? Or is there something else that is guiding people to perhaps misinvest or mistake where they are investing? What do you think is the cause behind this?
Well, there's a lot of things going on, and that would be a really long discussion. But I think it's actually been working.
You have a whole 8 minutes, 30 seconds.
Well, it's been, it's worked to be a momentum investor. And going back to the U.S., as you know, the U.S. has massively outperformed everything else in this world for a good part of my working career anyways. If you print enough money and you create the right narratives, you basically create a tulip situation where I don't want to miss out. And so capital continue to go back to the same places. And coming back to the benchmark discussion, the benchmarks reinforce this. The benchmarks are massively overweight the United States. Like the MSCI world is 72% allocated to the US. The US is like 23 to 24% of global GDP. But it has really worked investing in Mag 7 or whatever US tech phenomenon you want to pick. But we do know as investors, if you enter at the wrong price point and earnings ratios are incredibly high, but we're at a point in the earnings cycles where margins are incredibly wide right now too, where to me, that's not sustainable. Investing going back against that tide will work much better if we fight it. But it's been working so well, it's really hard to fight against that tide.
Is there an advantage for the fact that sustainability, green energy is out of fashion now with Trump in office for investors to come in at a low price point? Is this the chance to accelerate if we capitalize correctly?
100%. And I think we're just starting to see that. So the last couple of years, this is what I live and breathe, and I know some people are investors here, but like the S&P Clean Energy Index is down 67% from 2.5 years ago. It's been a really tough place to be. We're starting to see some M&A again. The valuations are as attractive as I've ever seen them in 20 years in our space. And as your associate said earlier, $2 trillion went to our space last year, which was up from the year before. And I won't be surprised at all if it's even higher this year. Like on the ground, stuff is getting built. And even in the United States, we're moving ahead in this space, and the valuations have never been more attractive. So you've got the growth is there. We're working through the technologies that don't work and focusing more on the ones that do. So there's less risk in my view. And I think it sounds like I'm selling here, but I think investors that move now into this space, back into it when sentiment is so bad, are going to do well in time.
So have we crossed the tipping point then where, sure, who is investing, it might change, and what they're investing in might vary, but the idea that we're going to invest collectively as kind of a globe in energy transition is going to happen. It's inevitable, or no, not yet?
No, 100% it's inevitable. I listened to there are issues like affordability. Your last speaker, we've got to deal with affordability, but the affordability issue is coming anyways because our grids are so old in the developed world, and the competition. We heard from Hitachi earlier, like we're back ordered 5-6 years for high voltage transformers and switchgear and so on. Like costs were going to go up. Inflation is real, but when we build the new stuff, the cheaper way to do it will be in that transition. It's not going away.
You and I talked about this earlier, but is investing in green energy a better investment than investing in AI?
Okay, I'm gonna quote an Economist article from last summer. They said that the top 100 publicly traded AI companies in the previous 12 months had added 8 trillion of market cap. Okay, I don't know what the business model for AI is yet. I'm sure there's much smarter people probably in the audience than me. $8 trillion. You know what we could do with $8 trillion in the energy transition? Like, that is such a waste of capital in my view. So is it going to be a better investment? Thank you.
Well, no, I think it's so interesting because
How are you going to follow that?
you know, I'm going to start asking other people.
Yeah, okay, let's do that.
Point. No, I think it's so interesting because obviously AI is the word that people are talking about. And I think there's a facilitation mechanism for AI in the energy transition. And we need technology to be able to achieve the goals that we're all putting forward. However, the complications of AI as this kind of panacea to solve all our problems is probably a false sentiment. So I just wanted to hear your perspective because I think it's interesting. But our colleagues in the audience would like to know, do we need to invest more in green transportable energy vectors like ammonia and hydrogen in this new world? What do you think on that?
It depends where you are in the world, I suppose. You know, Europe has natural gas problem right now, and maybe hydrogen's part of that. The way I look at it is the economics of hydrogen. You know, gray hydrogen is like $2 a kilogram. A kilogram of hydrogen has the same energy content as a US gallon of gasoline. You know, blue is 4 to 5 and green is $7.50. But then it's like another $10 for transportation and storage. So I just look at it as, you know, if it's $16 a kilogram, it doesn't make sense to me to produce green hydrogen and transport it. And we're getting better at batteries and storing energy where we can produce it. But I think the answer is probably more transmission of electricity. And that's where I think the opportunity is in the grid more than hydrogen. I didn't want to be too negative, but as an investor, we've been very careful on hydrogen, and I think it's been wise.
Where do you get the most bang for your buck if you're thinking of investing in green energy right now? If you had to give, you know, walk away and say to people, invest in these two things today, what would you say?
Well, grid last year was the one standout, and like Hitachi, Siemens Energy, there were so many places to play. I don't think that goes away. You got to be careful of valuations always, or we do. We're value managers, but I think that's a safe place to go. And the other one is batteries. You know, it's complicated because China produces so much of the batteries in this world and the materials to make the batteries. I mean, coming back to Canada, we spent, you know, tens of, I want to say $30 billion on battery manufacturing. I'm worried it's going to be worthless. But batteries, I think, would be the second. They're interrelated too. It's not just the cars, right? Batteries and grid go together.
Are you optimistic about this sector?
I am. I ask people all the time who are a little bit worried about the last couple of years and some underperformance. I go, where else are you going to invest? Because I don't think AI is the answer. I don't think you can go back to Mag 7. Some consumer products, maybe a bit of gold if you're really worried about the orange man to the south. But I think that I think our space is as good as it gets. No, let me just say, like, honestly, Canada, I've never seen Canada come together the way we have in the last 2 months. And
I've also never seen so many angry Canadians in my life.
Yeah,
they're livid.
We're mad, and we're small, but we're tough, and we'll fight it out.
John.
Yeah.
Thank you so much.
Welcome. Okay. Thanks.